This is Iggy from the Investing Iguana, and here's your breaking news. Singapore's Straits Times Index just smashed a new record, hitting over 4,008 points today. That's a fresh all-time high, even as the rest of Asia sees mixed trading. Why is Singapore's market flying when others are shaky? Let's break down the 5 crucial facts every Singaporean investor needs to know right now. First, global investors are flocking to Singapore as a safe haven. With rising geopolitical risks and uncertainty in the US and China, Singapore's stability and strong financial system are drawing in fresh funds. This rush is pushing up local stocks, especially defensive sectors like telcos and utilities. If you've got CPF investments or are holding blue-chip Singapore shares, you're likely seeing gains. Second, the US Federal Reserve is hinting at possible interest rate cuts, but nothing's confirmed yet. Jerome Powell, the Fed chair, said they would have cut rates already, if not for new tariffs from President Trump. Markets now see a 1 in 4 chance of a US rate cut this month and expect at least 2 cuts by year end. For Singapore, lower US rates could mean a softer Singapore dollar and possibly higher export competitiveness, but it also signals global caution. Third, U.S. tariffs are already shaking up Singapore's export and manufacturing sectors. The new 10% tariffs on imports, including those from Singapore, mean higher costs and more uncertainty for local manufacturers, especially electronics and high-tech firms. Fourth, Singapore's financial sector is feeling the pressure. With the U.S. being a major partner for fund management and financial services, any disruption or shift in global capital flows can impact local banks and investment firms. The Monetary Authority of Singapore may adjust its policies to support the economy and keep Singapore competitive. You might notice more talk about currency moves, hedging, and risk management in the months ahead. Fifth, despite these challenges, Singapore's market is still outperforming global peers. Since the start of 2025, the STI is up about 5.7%, even edging out the S&P 500. This resilience is thanks to Singapore's reputation as a stable, well-run hub and its ability to attract investment even in tough times. For retail investors, this means Singapore remains a strong choice for long-term growth, but staying diversified and alert to global risks is more important than ever. So, what's next? Keep an eye on the upcoming U.S. jobs report and inflation data. These will shape the Fed's next move and could swing global markets. Watch how Singapore's policymakers respond, especially if the U.S. tariffs start to bite harder. For now, Singapore's safe haven status is holding strong, but volatility is likely to stick around. If you're investing through CPF, SRS, or just building your own portfolio, review your mix and stay ready for more twists.